Coming up on the program, France among nations seeking to triple Africa's share of new IMF funding. The International Monetary Fund revises Kenya's growth forecast to 6.3% from 7.6%. AFDB and European Bank for Reconstruction and Development partner to unlock sustainable investment opportunities in Africa. Thank you for joining us on Business Incorporated. I'm Ladi Williams. Kick off the midweek show with market numbers where almost all markets we track were mostly in the red. Here on the African continent, South Africa's GSE declined 1.49%, while Nigeria's main index shaved off 1.52% at intraday. Only the EGX 30 advanced into positive territory by 0.56% at intraday. Kenya closed Tuesday's session negative. And over in the Middle East, investor sentiment is still the same, with mostly negative at intraday. Dubai's index was the only gainer with 0.24%, while the Abu Dhabi index declined by 0.15%. Elsewhere, the Qatari index shed 0.70%, while the market in Saudi Arabia was also down by 0.38%. And over to Europe now, where European stocks fell on Wednesday morning following a global dip in markets. Eurozone consumer inflation is also on tap. And let's talk to Conrad now for more. Hello, Conrad. Great to have you.
Good afternoon, Ladi. Thanks for having me back on Channels TV.
Great to have you again. So consumer price inflation was updated today for the euro area. What's the data looking like?
Well, we can be relaxed about inflation in the countries of the euro. In April, consumer prices increased at an annual rate of 1.6%. That's comfortably below the 2% price target the European Central Bank has. So, no monetary policy action by the ECB is warranted, no tapering of quantitative easing, no higher interest rates. And that's, of course, good news for the markets, which for so long have been driven so much by so much cheap central bank money. The situation in the United States, of course, is different. In the US, in April, consumer prices increased at an annual rate of 4.2%. Still, as the Federal Reserve considers this a peak in inflation, a temporary phenomenon, most people on the markets do not expect that any monetary policy action is to be expected in the United States soon.
All right, as Western Europe is leaving the third wave of corona infections behind, the European Central Bank is warning about risks for the stability of the financial systems. What are the central bankers concerned about?
They are concerned that we might see a growing number of company insolvencies soon, and that we might see many bank loans turn sour now that all over Europe governments are starting to slowly scale back the enormous help and support programs they introduced because of the corona pandemic. The ECB says in particular countries which have a large services sector are at risk. This applies, for example, to Portugal, Spain, Italy and Greece. What's more, the ECB financial stability people are warning about potentially too high valuations of certain assets, namely on the equity markets here in Europe, and also real estate prices. House prices are extremely high and they might be overvalued, the ECB thinks, and that of course implies a potential risk of an abrupt correction on these markets.
All right, so in a falling stock market, €1 billion IPO happened in Frankfurt today. That's talking about SUSA. You know, what kind of company is this, and was the IPO successful?
It's a very interesting company, I would say. SUSA is producing software for the Linux operating system, which is an open source computer system competing against Microsoft's Windows and against Apple's operating system. SUSE is also outstanding because it has a woman as its CEO. Her name is Melissa Di Donato, and Ms. Donato does not only have a very, melodic, nice-sounding Italian name, she's also a very good-looking woman, and she's a very successful and a very competent manager. The shares of SUSE were sold to investors who were interested in them at a price of 30 euros each. On their first trading day, the price for SUSE shares is up at the moment at around about 3 to 4%. So I would say this was quite a successful IPO here in Frankfurt today.
So we'll keep tracking SUSE, see how the price goes. Thank you, Conrad, and do enjoy the rest of your day.
Thank you, Ladi.
Well, in the UK, the FTSE 100 fell in morning trade amid the inflation worries. UK inflation more than doubled to 1.5%. Let's get an update now from Juliana in London. Great to have you, Juliana. Stocks in London fell sharply to the red this morning. Was it all about the inflation data?
Sorry, Laddie, you dipped in my ear there. But yes, unfortunately, it is all about inflation. We've been speaking about inflation, haven't we, for the past couple of weeks? And those worries have hit investors here in the square mile because the statistics released by the Office for National Statistics earlier today does show that in the month of April, inflation rose to 1.5%. This is more than double the inflation rate the month before. Now, the Bank of England Governor Andrew Bailey has commented on the data, saying that he will not hesitate to tighten monetary policy, which may include a rise in interest rates, which are still at a historic low of 0.1%. However, some economists are breathing a slight sigh of relief here in London, because if you compare that 1.5% in April to the 4.2% across the pond in America, then there is still a mass difference.
Okay, but meanwhile, house prices also grew and at the fastest pace since August 2007. What's fueling that?
Well, what's really fueling it is Chancellor Rishi Sunak. I'm sure he's really pleased with himself, because this data goes back to March, showing that house prices have risen at the fastest rate since 2007, before the financial crisis. And it was during that time, during the Chancellor's spring budget, that he announced a raft of support measures to try and help potential home buyers, including the extension of the suspension of stamp duty. Lots of people have been rushing to buy that. And then, of course, you've got turning generation rent to generation buy with that 5% guaranteed mortgage backed by the government. So that's really fueled the housing market. If you go back a year ago, the housing market was one of the first sectors to be given the green light to open from Prime Minister Boris Johnson. So it's very good, but it's still eye-wateringly expensive. If you want to buy a home here in the UK, it will cost you about £256,000, which, again, I think I've had this conversation with you time and time again, Laddie. That's the equivalent to about 150 million naira. Now, if you want to live in London, it will cost you about 300 million naira. It is very expensive. It is still a game for those who can afford it. And for now, I think the government are pretty pleased with the fact that the rate is increasing month on month.
That's indeed a big number there. But let's look at travel now. Ministers have been accused of sowing confusion over what foreign travel is permitted for people in England after sending out mixed messages relating to its traffic light system. Any clarity on this for now?
Not really, no. But Prime Minister Boris Johnson has just wrapped up another round of very fiery PMQs in the House of Commons. And the Labour opposition party, led by Sir Keir Starmer, did ask this question because, of course, on Monday, the 17th of May, it became legal once again to travel out of this country. There is a traffic light system. We know that the most popular country given the green light is Portugal, which is why it costs so much to get there at the moment. And a swathe wave of other very popular British holidaymaker destinations like Greece, the south of France, Spain, are all on the amber list. And what amber means is, well, what we think it was supposed to mean in this country is that you can travel to that country. On the way back, you have to self-isolate for 10 days. You can come out a little bit earlier if you produce a negative PCR tests after 5 days. But now Prime Minister Boris Johnson at the dispatch box has asked holidaymakers not to travel to an amber list country unless it's a very extreme reason. For some British holidaymakers, extreme is mental health. You just want to go away and get some sun. So there is still some confusion about this. According to some data, about 5 million Brits have booked holidays to amber list countries, particularly Greece and the Greek islands and southern Spain. So who knows what's going to happen? But you can imagine airline bosses are absolutely not happy, let's just put it that way, with the Prime Minister and his apparent U-turn.
All right, I guess we'll have to leave it there, but we'll keep tracking those colours. Anyway, thank you, Juliana. Enjoy the rest of your day.
Thank you.
And now to stocks in Asia Pacific. They were mixed today, with some markets in the region closed for the holidays. Australia's S&P ASX 200 led losses among the region's major markets as it closed 1.9% lower. Mainland Chinese stocks closed mixed, with the Shanghai Composite down 0.51%, while the Shenzhen Component advanced 0.23%. The Nikkei 225 in Japan fell 1.28% to end the trading day, while the Topix Index slipped 0.66%. Markets in Hong Kong and South Korea were closed on Wednesday for the holidays. And U.S. stock futures were lower in early morning trade today ahead of more retail earnings. Dow futures fell 216 points, while S&P 500 futures and NASDAQ 100 futures are both traded in negative territory. Meanwhile, minutes from the Federal Open Market Committee April meeting is expected to be published later today, and investors will be scrutinizing the release of the latest Fed minutes for any subtle hints as to when some tapering actions may be forthcoming. And oil prices fell for a second day earlier on the potential of Iranian supply returning, and as investors sold on speculation that inflation fears might lead the U.S. Federal Reserve to raise interest rates, which could limit economic growth. U.S. West Texas Intermediate crude futures dropped 1.1% to $64.76 a barrel, while Brent crude futures also fell 1.1% to $67.98 a barrel. According to analysts, market speculation that the Federal Reserve might raise rates because of inflation fears weighed on outlook for growth and, in turn, on commodities demand. Investors will be watching out for the latest U.S. crude and product stocks data from the U.S. Energy Information Administration due later today. And gold prices inched up earlier today, hovering near a 4-month high on a weaker dollar, while investors await minutes from the U.S. Federal Reserve's last policy meeting as inflation worries actually persist. Spot gold was up 0.1% after hitting its highest since January 29th. In the previous session, while U.S. gold futures rose 0.1%. In other metals, palladium gained 0.2%, while silver eased 0.2%, and platinum edged 0.2% higher. And after the break, we look at some developments on the African continent. That's in a moment. Do stay with us. Welcome back. You're still watching Business Incorporated. With the prospect of a third wave of COVID-19 infections being a concern in South Africa, economic analysts there say the risks to the economy of repeating past mistakes are clear and well known. According to them, certain segments of the economy have suffered an unbearable cost as a result of curfews and shutdowns, especially tourism, which employs a large number of unskilled workers and women. In the meantime, the country is said to have vaccinated less than 40,000 as rollout begins. To weigh into this, the Chief Investment Officer at Makwe Fund Manager, South Africa, Mr. Makwe Masilela, joins us now. Mr. Masilela, thank you for joining us.
Pleasure and good afternoon to you and
Good
to the
afternoon.
viewers.
Great to have you. Well, South Africa has only vaccinated 39,371 people over 2 days as its broad rollout of COVID-19 vaccines began. What would you attribute to this slow pace of vaccination, and what is the implication for the economy that is already struggling?
It was expected that we're going to start at a slow pace because of the logistics that are involved. And remember, it's for the first time that we are embarked on such a large-scale vaccination, and that applies to also other countries as well. But we expect this whole thing to pick up, so it's not a worrisome number that we have only just done under 40,000 in 2 days. I think it will be a problem if after a week or so, still we have not yet started picking up steam. And yes, our economy, just like other economies, are relying on the success of the vaccination programs, because the more they've been successful, then it means the economies will start to reopen. And we have seen in other parts of Europe, they have started to reopen their economies, and we expect the same to happen in Africa and South Africa. The minute we start reaching more or less, we are ahead that most people get the vaccine, because that's the only way people can have the right mobility when they have been vaccinated, and as well is going to be able to attract other investments and tourists, because if you know that a particular country has vaccinated most of their people, I don't think you'll have a problem to go and visit that particular country.
All right, but ratings agency Moody's says South Africa's low economic growth and rising debt burden could see, socioeconomic tension intensify and impede the policy reforms. What's your take on this?
We know back home here that we've got issues when it comes to the likes of service delivery. Now and then we see some protest. I mean, this Monday and Tuesday, we had some serious protest where you had a city called Bloemfontein being shut down because people were protesting, not happy with the service delivery. And I think, yes, to some extent, should we fail to grow our economy, it means the government will start collecting less revenue, and as a result, they won't be able to meet all the promises they've made to the people. But I think it's kind of far-fetched, because as it is now, we are not in that situation. Yes, economy is not doing that great, but generally there are positive developments in the country. And as well, when we have the expectation that our economy will do better this year and the following year, things should be okay going forward. And remember, by the way, the very same rating agencies, these are the very same people who told us that we must continue to buy the junk bonds in the US, and they rated them, instead of junk, as investment grade. So they had it wrong, and as a result, we had the 2007-2008 financial meltdown because they had it wrong. Something which was junk, they said, is investment grade. I'm saying this, bringing this up, to say that they don't always get it right. There are instances where they get it terribly wrong.
All right. Well, the rating agency also says the coronavirus pandemic's fallout will continue to weigh on South Africa's economic growth and fiscal balance in 2021. And already, the economy was in a recession before the pandemic struck. Is there any hope for a turnaround?
Definitely there is. Then you are right. We've been in recession before. But the way the vaccine program is going to pick up, the amount of vaccine that we're expecting in the country, should that get to happen, then yes, our economy should start growing again. And yes, our economy as it is, yes, we turn around. We know things that needs to be done, like to start all the structural reforms that needs to happen to start picking up our country. And yes, we do still have a big debt as a country, unemployment. But South Africa, just like other African countries, will still continue to attract foreign direct investments, because there are some positives when it comes to the economy. It's not all doom and gloom. Yes, there's much hope that the economy has to turn around, because we don't have a choice. This economy has to start working.
Well, what's your outlook for the second quarter?
I think the economy will do much better. The likes of tourism should do better, especially because the vaccination programs will have at least moved somewhere. And as well, the winter season will be getting coming to an end, because as it is now, we expect that we might have a third wave. Other provinces like Gauteng we already have a third wave, but after winter, this should be coming to an end. Then things should at least come to a near normal. Yes, it will take us a little bit of time, but we've just adapted into a new way of doing things. And it's not only us South Africans, I think everyone around the world have just adapted to the new normal. But yeah, we're optimistic that the economy will start picking up. Remember, we sell a lot of things, especially the minerals, to the European markets, to the Chinese markets. Every time their markets start picking up, then that increases demand when it comes to that. Agriculture as well, back home here, we export a lot of things to European markets. So when we see an uptick when it comes to the economies, then that will increase demand. Then those economies back home here will continue to do well.
All right, Mr. Masilela, thank you so much for your time on the program. Mr. Makwe Masilela is the Chief Investment Officer, Makwe Fund Manager, South Africa. Thank you so much. All right, still in Africa, France has called on other rich countries to follow its example and commit to reallocating part of the International Monetary Fund's special drawing rights to Africa in order to triple the continent's share of new funding support. The French President, Emmanuel Macron, says Africa is earmarked to receive $33 billion out of the $650 billion the IMF is preparing to give out to its member countries later this year, and he seeks to boost the amount to $100 billion through a collective effort. The IMF estimates that Africa faces a funding gap of $345 billion through to 2023. The summit was attended by the managing director of the IMF, Kristalina Georgieva, the German Chancellor Angela Merkel, U.S. Treasury Secretary Janet Yellen, and the Vice Premier Han Zheng of China, the world's top bilateral lender to developing economies. And its National Monetary Fund says it expects Kenya's economy to expand to 6.3% from the earlier projection of 7.6%. The IMF says the new revision is influenced by the third wave of the coronavirus pandemic that has continued to slow down the country's economic activities. It adds that the coronavirus shock has also reversed some of the poverty reduction gains Kenya achieved in recent years, and debt remains elevated. However, the IMF maintains that Kenya's prospects are strong and expects the medium-term growth to settle at its potential of just above 6%. And the Africa Development Bank and the European Bank for Reconstruction and Development have signed a memorandum of understanding to promote sustainable private sector development in Africa. The MOU will catalyze new sources of financing to help bridge the $2.5 trillion annual financing gap for development in Africa. According to the president of the AFDB, Akinwumi Adesina, the new partnership agreement between the two institutions will pave the way to support the growth of Africa's private sector while focusing on climate change, green and resilient infrastructure, and the development of capital markets. On his part, the president of the EBRD says the COVID-19 crisis has made the need for better and closer collective action even more urgent, and the collaboration will allow both institutions to do more to promote sustainable private sector development in North Africa. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. From me and the team, it's bye for now.